Welcome back! And today I'm finally back in Singapore. Really excited to see all of you here and want to make sure all of you are really back in action. And let me turn on a few things here. Woohoo! Wow, our chats are flooded right now. And if you are watching live right now, can I invite you to say hello on the live stream chat? Wow, so many of you are online right now. Woohoo! I think I gone away for quite some time. Let me pay my greetings to one and all. First of all, really excited to be back here in Singapore. And you know what? It's like a 1 month away. Nothing feels better than being at home right here. And we have so many of you tuning in live. Thank you so much for the support while I was away. You guys are holding the fort. And I'm really happy to see all of you here today. Wow! Holy moly! Let me pay my greetings to we have Christopher. Good to see you. Jeanette, Hannah, good to see you. Welcome back. John Trent and Kelvin, Milton, Jerica. Wow, you see, tonight we got a real full house, right? Finally, we are back on Singapore timing, not the weird. When I was doing like 10:30 p.m. Eastern Standard Time, 10:30 a.m. Now we are right now finally back to Singapore time. Good to see you, Calvin, Milton, Jacqueline. Good to see you, Jamie, Isabella, Cipe, Wilson. Who else? Jeffrey, Adeline, Elton, Kinip, John. I got lots of you, Chunman, Benjamin. Welcome back, Carol and Fabian. Wow. Thank you so much, all of you, for holding the fort. Now, I got so many things to share with you here today. First thing first, I kind of want to change the format. There's a few ways we're going to do it. And let me see if this works out well or not. All right. Wow. Look at this. This is happening. Today, I'll be talking about three topics. First is my interesting 1 month sting at Harvard Business School. And then I'll move on to talk about the key dates. And when we talk about the key dates right here, we are really drawing close right now to the key FOMC interest rate hike that was taking place 2 weeks from now. Next week will be the inflation data. And of course, what is the game plan that we're going to go about hitting the market, all right? So first thing, we're going to talk about Harvard Business School. And let me just switch back over here. Wow. Holy moly. I'm really excited. Today, I think I should be almost to the road of recovery. All right. So, I was kind of something is missing here. I think I placed it in the bathroom. So, I was back on. Today is what day? Today is Tuesday. I was back on Monday. All right. Monday and kind of suffered from a jet lag, really bad jet lag. Yesterday I was supposed to be on the live stream. My apologies to those of you who turned on live, but I was really spinning. I had a good sleep, 8 hours straight, and then we are also measuring how deep sleep I was entering into, and I realized I got a very pretty high deep sleep. Now today again I knocked out second time in the afternoon. I took a nap and then I woke up about 8 p.m. just now. So 2 rounds of deep sleep, I think that should do the trick for the jet lag. Okay, and what else is happening right now is this. First of all, I want to share with you about my one month plus in Boston. All right, so thank you all of you for joining me. Let me just switch off the live chat. All right. And I think it's going to be very relevant to those of you who are watching live, especially if you are building a career or if you are running your own business. Okay. So there are three major takeaways which I'm going to operationalize into spiking itself. And I'll be sharing with you this journey. I think it's important for us to take home. So let me go straight to the big takeaway. So I'm attending the Harvard Business School OPM program, right? This is a really world-class renowned program, existed for many years. And typically the OPMers that we call ourselves, many of them are distinguished entrepreneurs running their own businesses and having an international outreach, right? So last year I started the first year. The first year is kind of a warm up. I call it the warm up. We get into the strategy side of things, what we want to do to change the world, and how to make money decently. and, and they keep emphasizing on this part, all right? Make money decently and being very political in our approach to business. So year one was kind of a warm up, and last year we had the COVID-19. I was all of us didn't get to take part in the live campus experience, so we were kind of doing a Zoom, but the friendship was built, and this time round, this year too, is the first time me and my classmates, we came together at a campus and we got to meet each other, and really it's kind of a hair stand moment just talking about it, goosebumps all over me, because it's so magical to see someone that you go really deep dive into the sharing, and then finally we got to shake hands, hugs, and all that. So year two is we dive deeper into the who, what, where, when, why. All right. So who are the key people in our team, and you are thinking that in reference to your own company or to your own business. All right. The team players are really really important, and we begin to really know at a much deeper level, right, what it takes to build a very strong team. So we tackle about who. Second part is the what. What is the with regards to operational excellence? Everything that we do, we must demand operational excellence, and this is really really important. And they set such a high bar. Wow, it's a really really high bar when we talk about operational excellence. And there are some key metrics that we really need to work on. Where is more about what are the geographical territories that you want to conquer. Now, for example, for spiking, where is the market for us is we are very focused on traders worldwide who are investing in the US stock market. So regardless of whether you are from Asia, Middle East, Europe, United States, uh, Africa, as long as you are investing in the US market, you are becoming part of what I call the where target market. When is a question of timing. Now, the timing is what I learned. We can't really rush a lot of things, and that's the reason why we got to put the infrastructure in place really soundly, and then the business can scale up over time. All right. So something that I kind of have a big takeaway is that I'm the one who brought chaos to the business. How many of you brought chaos to your business? Where you know you know and that's the thing about us being the entrepreneur or the visionary, right? We want to do many things at the same time, and at the same time we also introduce many chaos into the business. How many of you are guilty of this? So let me just fire out. How many of you are guilty of bringing chaos into your business, where try to do many things and then everybody kind of got shocked? Now you might be thinking, "Hey, teacher, I'm not running a business today," but let me prepare you. All right. Even if you are working for someone else today, it is so important that you recognize what makes or what builds an enduring, sustainable, successful company. This is really really important. All right. So we spent a great deal of time. I mean, we were surrounded by very learned professors from HBS faculty. We call it the Harvard Business School faculty, and just diving into this part is so important. So we cover who, what, where, when, and why. Why is why our business deserves the highest attention and in building excellence. So we cover who, what, where, when, why. And the last part, which is the next 1 year before I go back to the class for next year and to complete the graduation, is the how. How do we put in place all these things that we learn and then operationalize it? And then by the time we come back, return back to year three, we are ready for the big growth in whatever business or endeavors that we pursue. All right. So it's so much things to learn, and let me just show you like how much is involved, right? So this is the school bag they gave us, right? Holy moly, this is a school bag, all right? And then just on the printed materials alone, oh my gosh, it's like I mean, it's like now I take out for you. It's like this is file number one, okay? And then look at the amount of materials here. Wow, my gosh, I mean, it's not just file number one. There's a file number two. This is file number two thing, and then there's a second file, and I'm still not done yet. Okay, I mean, I still got one more. Oh boy, this is a huge. This is the place where we write our notes. So 3 big folders, and what is expected is, we are really just doing a lot of case studies, understanding how businesses are built. Some of them involve public companies, and this is the part that connects with what we do in the stock market, what we learn on textbooks, apply the case studies, and then how it transforms on the stock price. And the biggest takeaway, surprisingly, among all of my classmates, majority of them don't take an active look at the performance of the stock price, which is I think I'm the only one in the whole class that takes a concerted effort to look at the stock price. Because why? Stock price reflects what the market believes in the future prospects of the business and what you're willing to pay. So it's a willing buyer, willing seller. That's why I want all of you to know you are my students, right? What we are doing is really at the cutting edge. The cutting edge of understanding pricing, what Wall Street is willing to pay. Now, as you can see, while I'm away for like 1 month, right, the market taken a real big beating, because I shared in my previous video, Fed Chair Jerome Powell right now wants to front run the stock market, and this is chaotic, extremely chaotic. The moment he wants to front run the stock market, he will do whatever it takes to pull the brakes. And that is what we are experiencing right now. So some of you are watching the market and kind of getting confused. Hey, teacher, what's happening? Great businesses, the earnings getting trashed, guidance getting trashed, revenues, even they did very well, the stock price getting trashed. Because of one guy. And that guy is called Jerome Powell, Fed Chair Jerome Powell. He's shocking the market upside down. All right, so we're going to dive into that. Don't worry about it. All right, so coming back. So my big takeaway from Harvard Business School, number one, is really so fascinating. We got one entire three-week stream and entire flow to internalize. It's not easy. All right, so what I'm doing this week, just on week one coming back to Singapore, is just to internalize and then structure the whole flow, and then I bring on board a business coach to help us look at how we're going to grow the business and how we can build a very, very concerted, what we call operating system. All right. So I think it's so exciting, so fascinating. It's like finally I got the tools, the knowledge, and whatever it takes, the skills to build an enduring business. So this is the part that it's like kind of transforming from what I've been teaching you guys about stock market, and how you translate this knowledge into the business or career that you're building. And then from the business career that you're building, how it goes back to the original cycle of finally understanding the stock market again. So we go it's not like in a zigzag manner. It is in a very connected basis approach. Everything that we learn from the stock market, we can transform back into the business, but we need to build the bridge. So the bridge is what I'm thinking about, how to transfer this knowledge I pick up from Harvard Business School and impart it onto you. So that's the top of my mind right now. I'm really, really excited because I think many of you come to the stock market. There are 3 reasons why you come to the stock market, and there might be more, but I think majority, the 3 reasons is this. Number one, you're hoping to pick up certain knowledge from the stock market that you can apply in your career. So those of you who are pursuing a career, 9 to 5 job, perfectly nothing wrong with that. Working for someone else and being part of a management team or executive team, perfectly fine. All right. But you want to take the extra time when you look at the stock market, pick out certain great learnings and apply in your career, helping the business or the company that you join to go to the next level. All right. So this is, I think, the first category of you. Second category of you is where I belong over the past 20 years is when you are running a business and you're playing the stock market at the same time, how both skill sets are complementing each other. All right, so that is the bridge. Now, the bridge right now to me, I mean, we have done many, many things right, but in a very chaotic manner. It's not in a structured manner. So what I learned from OPM year two is how to bring the structure in place and connect the dots. And that is, I think, very, really, really important for those of you who are running your own business, own company. All right. I want to translate that knowledge and you grow together with us. All right. So that's the second category. Third category, for those of you who still are sitting around cocoon in your house, not going out to meet people, let me tell you, Singapore has officially opened up. It is official. I mean, I so excited when I on the return flight back to Singapore. Once I stepped into the Singapore Airlines, and I asked the stewardess, "Hey, what's the latest? Are we compelled to wear masks up in the air?" He said, "No, that rule has been removed. But if you look across all the stewardess and stewards, they still put on the mask as kind of a safety protocol for themselves. But for the passengers, none of us wear masks. I mean, for the 3 weeks I was at Boston, nobody wear masks, right? It's like, and the best part is, in my class, there are classmates who are coughing non-stop. You go, hoo, and after a while, we got used to there's one guy and one girl that's coughing non-stop during the lectures, right? They got a persistent cough problem, but none of us caught COVID-19. I mean, it's like it's so amazing, right? So, back to the part that if any one of you think that you are still locked down at home, cocoon, not willing to go out there and meet people, all right, you got to change that. Singapore has gone ahead, while other countries have reversed back. Now, I just read the news. Taiwan has reversed back. I read the news that Beijing, Chengdu, Shenzhen, they have reversed back. That means they are implementing lockdown conditions and making it more difficult for people to visit their countries. So that's a backtrack. In the US, everything is no holds bar, right? Everybody just go back to normal already. So many things to share with you, and how's everybody? All right. So we covered the first part on Harvard Business School. I can tell you over the uh, next few months, I mean not even few weeks, few months, I'll be talking about it because I'll be articulating it out, and you can apply to your career and your business, and you see how we apply here at Spiking, and that's how we learn to grow together. Right? So let me ask this very important question. How are you? Okay. I want to hear from you. How are you, everybody? Wow. Look who's where's my post? Just send it out. Oh, you guys are typing really fast, man. Okay, let me take a look. Where was my post? How are you? Okay. Good. I see the responses right now. Hang on. Because the live chat is moving too fast. Isabella doing great, Kingip great, Benjamin doing great, Elting good, Jeffrey excited to see me back in Singapore. Yes, really excited to be back. Christopher learning and applying. Hiram is still on New York time, I think. Milton, Ronnie excited. John is thank you. Thomas great. Wow, and Jacqueline fabulous. Jeanette well. CP And how am I? I think I'm on the road to complete recovery of my jet lag. I slept 2 rounds of deep sleep. I think by the time I hit my third or fourth round, I should be fully recovered. Pretty fast, all right, the recovery. But I think what really drives me is there's so many things that I'm going to implement, and I think I'll give all of you the big picture when I lay out the game plan during our upcoming Cozy Live Trading. All right. So those of you who have not locked down your dates for the Cozy Live Trading, can you please do so? That will be on next Thursday. Next Thursday on the 15th of September, which is exactly 2 days after the inflation data will be published. All right. Okay. I mean, it's like mind-boggling. So, in terms of the key dates, we have next Tuesday, which is 13th of September, we have the inflation data report at 8:30 a.m. Eastern Standard Time. And then 21st of September, there will be FOMC declaration of the interest rate hikes. All right. So just take note of that. Now, everybody is good, and we are back into action. So, I got my things really comfortable set up here. I got some other new equipment that's coming in. And today I'm about to unwrap a big surprise for you, but the UPS delivery is not here yet. So let's wait for the UPS delivery to be back, and then maybe we can do this tomorrow. Okay. So we done on the first part on the Harvard Business School. Kind of a very, very quick and fuzzy explanation or update, but I will put into place a very, very clear structure to share with you because this is very privileged content, all right? Very, very privileged. I mean, um, what I discovered is, first of all, it's very difficult to enter into the program in the first place. I mean, like, I can open up the stats here. Maybe we do it another day, not today. There's a big stats where they profile us every intake. So I belong to the OPM 59 intake, and then we have a big combination right now, right? So what we're gonna do next right now is this. We covered the key dates, and I'm gonna share with you the game plan. So I'm back. There's quite a lot of power of work waiting for me to clear this week. So it's when I'm away for about 1 month, everything piles up, and quite a number of people waiting for me to action off the items. But I'm coming back. First thing is to address our community, make sure you guys are fine. I'm very, very happy to see all of you are back in action. Really good. And I see Dizu, Benjamin, Jerica, Fabian, Ryan, Chuman, Manfred. Manfred just came, so good to see all of you. Okay, so without further ado, we are done for the quick updates. And of course, there'll be many, many more along the way I'll share with you guys, all right? What is important right now is to kind of take a look at the marketplace. And first thing first, we got a really sad news that just kind of a pop out. And when we look at a sad news like this one, Bath Bed and Beyond, where the stock price spiked down 15% because of the death of the CFO, you kind of suspect something is going wrong here, right? I think the first thing is that this, I suspect, is a suicide, all right? A suicide whereby the CFO cracked under pressure because he's facing a major class action suit right now because of him. Right now, what Wall Street is saying is manipulating the stock price for BBBY. So this is kind of shocked everybody, and the market responded with a spike down of 15%. And when you see this going out, right, what's your response? The response is Wall Street is very, very real. It's not even like a scripted movie. It's as real as it gets when top executives who either go on the dark side of illegal insider trading, they'll crack at a certain point. At a certain point, they'll start to crack. So crack means that, number one, either they will leave trails of evidence behind and they get caught by the regulator. That's number one. Number two, they will crack under pressure of the shareholders or the board of directors. Boom, they'll crack. And number three is we've seen it quite a number of times when individuals take their own life. It's the easy way out for them. And I want to make this clear to any one of you out there who's thinking about going the same path. I mean, I'm laughing right now because I want to treat this matter in a more sensitive, more casual approach, rather than I tell you in a very solemn tone, all right? So if any one of you are thinking like the same path of the bar, bed, and beyond CFO, you think that, okay, I take my own life is the easiest way to paradise. Let me tell you, it's damn wrong. In fact, you created even more problems for those that you left behind. And I tell you, this is a really, really important message, all right? So we never think about, like, take a shortcut and then end the life. This is the cowardice approach. And I and then, when the person crack, the fella will really crack, right? But how do you navigate out of a situation when you're so down and you feel like all hopes are gone and lost and you can't pull yourself out of it? How many of you would like to know the answer to this question? How many of you like to know the answer to this question? All right, let me post out this question. All right, and the question goes this way: how do you get out of the valley of the shadow of death? Wow. How do you get out of the valley of the shadow of death? This is a very, very important question because I don't want to see any one of you going the same path as the CFO of Buff Bed and Beyond BBBY. And he took a shortcut, but let me tell you, the mess that he left behind is even worse for his loved ones, all right? They have to clean up his mess, and it's really terrible. Wow, your questions are all like fast and furious. Okay, very, very good response from all of you. Jamie, turn to God. Christopher, Jesus. Milton, answer behind you, pray to God. Faith, speak to someone. Share your experience. Thank you in advance. Manfred, talk to God and you'll find a way. Okay? Surround yourself who can help build you up. All these are great replies, and in fact, I taught you guys before, but you all forgot already. You see, that's the problem. I taught you guys about the formula already. What is the formula? How to get out of it? All right. So one of the easiest way, the easiest way of them all, right? And let me show you right now is this approach. You must find something that you can connect with, and I'm going to show you what I connect with, which is very, very powerful, right? So let me show you right now. Here we go. Whoops. Bang! You must start learning how to sing, and really sing out like crazy sing. All right. So this is the place I go to. Every time I feel down or discouraged, I'll come here and find a piece of the song and I just sing like crazy. Sometimes pray. I mean, we also got pray, right? I mean, and of course we do pray, but the one that uplifts the spirit is singing. All right. So singing with joy, singing, and the one that I click on videos, and under the video series, which one is the one? My favorite album right now. I think it's part 1 or part 2. I think it's part 1. All right, this one. Yeah, this one. Okay, this is the one. It's called Sing Sing Sen Qi, right? And if you guys don't remember, and let me risk it. When I play, right, YouTube will kind of hit me with a copyright strike. Let me try. Oh my gosh, such a beautiful song. 并赞美我的手要不停高举， 去自我的信心。每个困难中，我经历神迹。Wow, look at, you just hear the song and the lyrics. For every trouble that we encounter, we experience miracles. That was how I blatantly translate what the lyrics was about. All right, so you find a song that you can identify with, and straight away you go into the singing. You go into the sing mode. All right. So this is how you get out of the shadow of the valley of the shadow of death. And after singing, of course, the problems are still there. Then typically for me is there's a logic sequence behind that. Step 1, I sing. Step 2, I pray. And then step 3, get back to work. The step 3, getting back to work, I think is so important. So let me kind of lay out this part here. And I kind of getting excited with all these new tools I have, right? So let me just put it out here. So number 1, right over here, we really sing praises, all right? Number 2, we pray. And number 3, we get back to work. Okay? So this part here is how we help ourselves to navigate. And of course, there are many other aspects, not just these 3 steps, not just about singing, praying, and getting back to work. And how to get back to work with uplifted confidence and humility. And very, I'm speaking quite fast right now because I got so many things to share with you. In the final lecture, can you believe it? What you typically remember, you going to a program like this, you at Harvard Business School, you remember the day 1, they set up the standard expectation. And then the last day when they conclude the program, they drive and punch home the most important point. And can you believe what's the most important 2 words for Harvard Business School? Can't believe it, man. The 2 most important words in the final lecture is number 1, confidence. They are preparing us to let us know with renewed confidence, elevated confidence, refreshed confidence, that we're going to do very, very well in whatever business that we are in charge of. And because of that confidence, the second keyword that goes hand in hand with it is humility. I mean, what a great paradox, right? I mean, these two words don't go hand in hand, They say, then you must have the humility to go on, continue to learn, and be refreshed of the changes. So I'll dive deeper into these 2 words, confidence and humility, in a much more structured manner as I share with you guys in the next upcoming Cozy Live Trading, okay? So many things to share, and then we come back. How do you get out from the valley of the shadow of death? All of you are seeing it, and life, Bath Bed and beyond kind of go through a very, very tough time. And that's the reason why I want to caution you guys, don't think about taking the shortcut out. You are leaving multiples of the problems for your loved ones to clean up your mess. Do not do that, all right? So we covered that, and we're going to take a look at what the market is telling us today. I mean, I'm kind of sharing so many things at the same time, but I'm really thankful all of you got such words of wisdom to share on the live stream. Really happy, all right? And be a positive influence going out there and making sure that, whatever you learn, you can go out there and spread the positive vibe. I'm going to switch my screen right now over to here and just let the market inform us what is happening at this moment, all right? So I'm going to do a quick refresh. Boom. And here we go. The market has opened up already, and check this out. Let me just switch off the live chat for a moment, and we can see a much bigger screen, okay? So here we go. We have two green and one red, Dow Jones and S&P on the positive, and then Nasdaq in the red. Dow rises slightly in volatile post-Labor Day trading as investors assess strong data, surging rates. So this has always been the big issue, right? We've been handling this because what is the big takeaway? Remember, always remember, there is always a cause and reason behind it. And that is Fed chair wants to front run Wall Street. He's really upset with Wall Street traders, people like us. We have been front running the Fed chair, we have a bear market rally. And he's seen the bear market rally, he got pretty upset. He come down and put a big feet down, right? So that's why we are facing this current conundrum. And of course, over here, we also have I have this encounter with Bill Ackman. I feel like this is like mind-boggling experience. Because why? The 3G folks actually came to speak to us at the Harvard Business School, right? If you watch the previous video, they are Restaurant Brands International, and then I kind of quickly first want to raise the hands and pose a question to them, but my question come in three different parts. So I sneak in three questions to one question. Every one of us entitled to ask one question, but my question came in three parts. So it's very, very real to me. And Bill Ackman really nailed it. Really, really nailed it. And if you look at his portfolio of stocks, right, it's not many, So let me just dive in right now and show you the Bill Ackman portfolio of stocks. You'll be so shocked. This guy's like so few stocks in his portfolio, but each one of it is like a sniper, right? So let me show you how we go about navigating that. Here we go. So we are on a spiking wealth management system, and then we kind of click to investors, our top 100. So once you're inside top 100, we can search for Ackman, right? So straight away, boom, Ackman is there. ACKMAN. Oops. All right. And this is Bill Ackman. Here we go. So look at his portfolio. How many stocks? I mean, it's mind-boggling. Only 6 stocks. 6 stocks. That's what you're looking at right now. Only 6 stocks, right? So we have Louis, Chipotle, Restaurant Brands International, Hilton, Howard Hughes, and Canadian Pacific Railway. And the Canadian Pacific Railway is like almost about to dilute or sell off because it's only worth 218 million. The big ones are like Louis 2 billion, Chipotle 1.8, Restaurant Brands International 1.4, Hilton 1.3, Howard Hughes 878, and then Canadian Pacific 218 million. The rest, he has sold off everything. Okay? Just on these 8 stocks, his portfolio is worth $8.9 billion. I mean, this is like, if you are trying to follow someone who is like what we call a sniper, this is the guy to follow. Very, very precise, but he's also very swift, right? For example, this year he bought into Netflix. Within 3 months later, he dumped everything. That's how you see under Netflix, he sold off everything, right? On 15th of August, that was the reporting period. So I begin to have an understanding of what Bill Ackman is looking for when Restaurant Brands International, the 2 co-founders, came to speak at Harvard Business School. I mean, it's like he is looking for founders that just grind the business, really just slowly grind, and it's not like looking for phenomenal spikes in the stock price, all right? And of course, over time, Restaurant Brands International is able to fight off inflation. They did pretty well in that, and they are still growing their franchise, and it's all about Burger King and all other Popeye and all other brands under it. So I get a feel of that. Then the challenge comes back to me and say, hey, what do I want to focus on? Where should our community be looking out for opportunities? We believe in the art of time squeeze, from trade to invest, invest to trade. Depends on your sequence. Some of you invest your money to trade into individual stocks, or some of you trade, which subsequently led you to invest in great stocks. I do not know what's your sequence, and every one of us got our different sequence. All right, so it's not like a template approach. Everybody doing the same thing. So this is the part that investing make us so much fun to derive out of it. So if you go back to this article right here, we have Bill Ammon outlines when the buy signals for stocks will come. We're going to take a look at this article. And then we go down, not the rest not so interesting. And then we come back to here. This is the big headline of the day. Barbet and Beyond taps Chief Accounting Officer as interim CFO after executive's suicide. They finally used this word suicide. When it was first announced, they were using other words like jump off. I mean, what's the meaning of jump off, right? So finally, they admitted that it was a suicide. The guy has cracked. Obviously, the hedge fund that is kind of a play out all the investors will get a very, very big punishment soon, right? I think they have completely manipulated the stock market on that. So we're going to come down to this part here. This is the latest news. I want to skim through and make sure we have a grasp of what's happening tonight. All right. So this is my approach of trying to bring you guys through the awareness of what is happening on a day-to-day basis. So we have selling a recently rallying oil stock, and then what is this about? Russia has officially cut off Nord Stream. That's part of their battle plan. And right now it's official indefinitely, means forever. Now, how this will play out, I think China and India will benefit because they are buying like cheap oil, cheap gas, everything cheap, great sale from Russia, and Russia just have to focus on these two main customers, right? Shares of Trump-linked SPAC fall after the merger extension vote reportedly fails, and of course, right now the politics is all out to bring Trump down ahead of the presidential election in 2024. And we can go down. BMM, we're going to look at it in a short while. Nothing much. The rest is just everybody just warming up from the Labor Day, all right? So don't have to rush. And we continue to click here. Oops. Hang on a minute. Click too fast. We are until here a little bit more. All right, here we go. So that's about it for today, all right? Because everyone just returning back from Labor Day holiday, nothing much. There's mention of Apple, Tesla. We're going to take a look at this one. What else is interesting for us today? Here we go. All right, we have Anon Bosch InBev says stock can surge 30% on premium brands. I'm not going to look at that yet. But this one for Tesla, I'm interested. I'm going to take a look at Tesla right here. And then the rest, we have a new prime minister in UK. This is like the Margaret Thatcher number 2, all right? So everyone got very high expectation of our new prime minister. Just let me click on it, and that's about it, all right? Okay, so I'm going to reverse track what we gone through just now. This is Liz Truss becomes Britain's new prime minister on Tuesday, which is today. And of course, we really do not know what leadership role she's going to play until you give her about 3 to 6 months, right? Will she be as tough as Margaret Thatcher? Nobody knows yet. But a woman in charge is better than a man in charge, I think. She needs to restore back certain peace and calm into UK and unwind the politics. That's my interpretation of it. Okay, let me jump straight into Tesla. Why Tesla can surge 30% on Inflation Reduction Act, says in an upgrade to buy. So, when I was in Boston, I kind of met up a few Tesla NQS. I mean, they really put in big money into Tesla. I think it's really, really big investment on their part, all right? I can't tell you the amount over the air, but they are really big players for Tesla. And what is the narrative? Why there are individuals out there who are investing really big? I'm talking about not like $1-2 million kind. I'm talking about anything that's between 10 to 100 million from a retail investor. Now, we also have retail investors who invested more than $1 billion, but that's like the rare few, right? But averagely, if you're putting between 10 to 100 million on an individual stock like Tesla, you must be a very, very big fan. All right, so let's correlate that to what we are reading from this analyst article. Here we go. Okay, it's attacking on the Inflation Reduction Act, and typically the big numbers is right here. Why is the number so big? Because the electric vehicle maker and its customers may net close to 11 billion in US government incentives by 2025, which is about 3 years from now. They can net in 11 billion in government incentives. So this is huge, and Tesla being the market leader, they will have a big capture of this 11 billion, all right? So from here, they put out some price target, right? He raised the 12 months price target 360 from 280, and right now, we go and switch back quickly, and while we are looking at the price, we are going to show you guys after the stock split of Tesla. And we kind of lost out in a narrative of what is happening to Tesla. All right, so let me put this out back here. Here we go. So this is Tesla right now trading at 270 after the stock split. Okay, and obviously, if you want to see the stock split, just make sure you go to this part here under events, click on stock split. Just make it a habit, you always click on this too, and then you'll show up the stock split right up here, right on the bottom right. Now, one of the big discussion that most people totally miss out on is the stock buyback. Now, Elon Musk has spoken about stock buyback. He has not made a commitment, but he forecasts most likely they will be reviewing a stock buyback in next year, maybe second or third quarter of next year, right? So you are looking at a chart right now. Of course, the market is going crazy and everyone has different price projection. This particular analyst has a price projection to 360. So very quickly, we go to 360 right there. And I want to make sure I'm on the right track. Hold on a minute. I got to do one more step. 360, which is around here. Okay, that's your 360. And if you look at the highest price, which is always our approach to trying to capture the red box, we are looking at the $400 price range, which is around here. Okay, and today we are still floating at 270, kind of start to move sideways already. And this is where we are, right? So let me move my mouse over here. And then you'll go up to there, okay? So 270 floating sideways, and then we come back to the argument. Why? It's because of the Inflation Reduction Act, of which they can assemble more than 50% of battery components in North America itself, right? So that could shave off about $3,400 off what it costs for a typical Tesla vehicle. So I'm going to switch back right now over here and ask you to perform this investigation. I've been hearing it, I've not seen it with my own eyes, but this is what you should investigate. Go and ask any of your friends in the US about the market for Tesla cars, brand new cars. Do you know that the demand is so high that the moment a brand new owner of a Tesla, he collected his keys, right? Let's say today. And he goes back to the market and say, I'm ready to sell. He can sell and take a profit premium of about 20 to 40% just by flipping the car. That is what I need you to investigate. Now, if you believe that is to be true, and I take the words of the guy that shared with me about this to be true, then jolly well, for stock price of Tesla hit 360 is no-brainer right now, being compounded with the effects of the Inflation Reduction Act. So all this putting in together, our thesis remains strong for Tesla. All right. So of course, what is the best price to enter? We'll go into deeper details on that when I fire the trades for Don't Stop Believing. All right. So that's about it for Tesla. And every time reaffirm our thesis when we come across fresh articles like this. Second one is biggest analyst calls of the day. We got a few company on target right now. First of all, I want to dive into the important ones. We just covered Tesla. Next is I want to look at Amazon as the best idea, right? Why JP Morgan says Amazon is the best idea, right over here. Okay, they're going to take away all the e-commerce shopping. And obviously, the stock price doesn't justify it yet right now because so many turbulence going on out there. But we're going to just remind ourselves, Amazon is in JP Morgan's best idea list. And then we go on down. Why is Target a top pick for UBS heading into 2023, right? Because it's working through its inventory backlog, and we believe the one-time cost incurred over this period will not repeat. So about clearing the inventory, and I seen it with my own eyes that there's no can't even say the words out. There's really no recession sentiment among American consumers. They're buying like crazy. Restaurants are fully booked. I mean, we try to book the restaurants. When I was at Harvard, it's like they're so anal about it, about the booking, right? At Newbury Street. For example, we booked a table for 8, and then one of our classmates joined us last minute, the ninth guy to come in. They just refused to offer the additional chair. Just like that. I mean, in Chinese restaurants, you would just keep squeezing more and more chairs into the same round table, right? But not for the US. That's something I seen it first time with my own eyes. And of course, the whole place was packed, all tables fully taken up. Okay, what other companies that I want to kind of dive in to look at? Apple again, and you begin to feel the tone, right? Why everybody start to talk back about the mama stocks, okay? Because they feel that this is the bottom already. Every time when we look at the mama stocks means the market sentiment has reached a bottom at this moment. So what is in it for Apple? Here we go. Our pricing for iPhone remains a watch point for investors. The focus should be greater on pricing for wearables, AirPods, and Apple Watch, which are a more discretionary purchase for consumers relative to iPhones. And the recent report that they've overtaken Android in the US market. That's a big thing, right? So when I say it's a big thing, let me show you that part about Apple overtaking Android, all right? Apple, Android. I hope you guys caught up with this piece of article. Overtakes. All right, here we go. This is the big news that you guys must be very aware of, or else you miss out the fun. All right, here we go. Apple iPhone has officially overtaken Android, claiming 50% of US market share. So the question that we should be asking is, how the heck this thing happened? That when it was in less than 50% and you capture more than 50%, that's a big thing, all right? Means that it has gone through a consolidation phase, and the product offering by Apple is far superior than the competitors. And those who chosen in the past to buy a cheaper product with more features in it decided to return back to the bright side. They are coming back to buy iPhones right now. They realize that yes, it's cheap, but it's many features, but maybe it's not as powerful as the iPhone. So this switch is a big switch. It's a clue to us that if consumer demand has made a switch, then the stock price accordingly must reflect this switch. So I'm going to go jump right now across to look at Apple. I mean, I hope you guys are handling well. I'm talking about quite a number of stocks today. All right, and we're going to take a look at the chart right here. Ding, ding. Here we go. And Apple is still below the 200-day simple moving average line, which is important to us, all right? Means you have every chance to take advantage of this piece of news as the leading indicator. Consumer demand must always be the leading indicator, and then I come down to right over here, 2020, all right? So here we go. This is what we are looking at. And if I zoom into the 150 range, which is starting around here, okay, 150 range. Here we go. Let me draw this out. This is our 150 range to the 180 range. In fact, I'm always aiming at the $200 range, right? So this is the red box. And in this red box, Warren Buffett is still buying Apple. Those of you who are not aware about it, let me just show you why it's so fascinating to look at Apple and look at Warren Buffett at the same time. All right, so here we go. Let me come back here to Berkshire Hathaway. And that's how we keep manipulating the data to connect our thesis. All right, so here we go. We go to step 2, insider trades for Berkshire Hathaway. And you can see that in quarter 2, Warren Buffett went in to buy $600 million worth of Apple stocks. Okay, so we connect this dot. We have a quarter 2. Quarter 1 he bought as well, right? So if I click on Apple, ding, and you can see right over here, quarter 2. Right over here, quarter 2. This is the one that I want to show you, right? In fact, he has stopped buying Apple since Q4 of 2020. All right, if you look at the data from Q4 2020, he has stopped buying Apple because the number of shares stuck at 887. 887, 887, 887, 887. So if you look at Q4 2020 versus why Q1, Q2 in 2022, he decided to ramp up, right? That's something we need to understand. Really, really important. So we're going to draw this out on the chart. Q4 2020, all right? So here we go. Q4 2020, and I got to reduce a little bit more around here. I hope you guys can see clearly, all right? Q4 2020 will be 10, 11, 12. Okay, I'm trying to do from around this level here, 10, 11, 12, around here, okay? That was the last time he stopped buying. And then if I go right now, let me redo one more time. I want to fit the charts really nicely so that we can really see it nicely. Q4 2020, all right? Q4 2020, 10, 11, 12. Okay, here we go. We're going to attempt to draw it one more time, all right? So start from October, 10, 11, 12, right over here. Okay, that was the box where Warren Buffett stopped buying Apple shares. And then we start off this year, the first 6 months, he went on to start buying. I need to understand why. And we go all the way here. This is a Warren Buffett purchase. Okay. Now, if I draw a horizontal line across, then you begin to understand, oh, there is a place here. I draw a horizontal line from here to here, right? Can you see this horizontal line, it means that in Warren Buffett's perspective, when the stock price is trading around here, it's called cheap cheap. He'll only buy when it's cheap. So he feels that in this range is cheap, all right? Now, if this range is cheap, then if I cut through the middle part of it all, we are getting about the average price of this box, which is worth it right now because it's still sitting below the 200-day simple move, 200-day simple moving average line. So that's what got me excited about this part. All right, so we'll dive deeper into this, and it's like I got so many things to share with you guys. So I hope you've seen that already and you remember it, and I shall not give away more stuff. Okay, so we're done on that, and of course, we're going to cover the last article. Why Bill Ammon believes that the signal is coming soon for the stock market recovery, and we can finish up what we planned out for today. Okay, so here we go. We're going to read out this paragraph here, and let's check this out. Once people realize that the Fed doesn't have to keep increasing rates and will soon be taking rates down, that's kind of a buy signal for markets. So we do not know about this signal yet until when? 2 weeks from now. All right. So I've given you guys the key dates earlier on. That will be on the 21st of September. I think the question is, how far in advance does the market predict that kind of outcome? That's called front running the Fed. I think if people see inflation come up 8.5%, you start to see a pretty powerful continuing trend, then I think people will expect at some point the Fed to ease. So this coming off 8.5 is exactly 1 week from today, next Tuesday. We will know the inflation data. I think we'll probably hit about 7 plus, maybe hit about 7.8 or 7.9, right? So let's see. And everything is going to happen very fast starting from next Tuesday. So make sure you all keep the game plan in mind, all right? What they are not going to do is take rates to 4%, which is very, very high, and see a good inflation print and start taking interest rates down again. They are not going to make that mistake. So that is where, if the Fed raised the interest rate to 4%, that is over raising it. Then we cannot have the stock market rebounding. So that's how I interpret this paragraph by Bill Ammon, all right? So, and of course, Ammon has said several times this year that the central bank should focus on fighting inflation, calling rising prices the biggest threat to U.S. economy. And there are indications that inflation is now cooling. U.S. inflation readings in July showed inflation slowing, helped by falling gasoline prices. All this you can read, you can listen, you can watch everywhere. But how to connect them and make sense of what is the interpretation is exactly what Bill Ammon has said over here in this article. Okay, so that keeps our hopes really, really alive for a big rebound this year. I'm not too sure for this month how it will respond, but one thing for sure is there's a pent-up demand, and that's my view on ground. Severe pent-up demand. And can you imagine, on my flight back to Singapore, the flight is full. My flight to Boston, to New York was full. From New York back to Singapore was full. And it's like, people talking about not traveling, scared of monkeypox, scared of this, scared of that. But it's full. This is the real on ground, that I seen. So the demand, the pent-up demand is there, very, very strong. It's just that we just need two things to happen for this month. Number one, inflation data should go down below 8.5%. That was the last month's reading. Number two, interest rate hike should probably stay at 75 basis point. Anything above it will topple over to recession. Anything below it, we're going to have a big run up again of the stock market. So kind of interesting, right? Wow, we shared quite a long time today. Holy moly, we done a 1 hour video. It's very, very long, but I'm just very excited to be back here once again to see all of you. So before we go off, just want to make sure you guys are enjoying it. We'll be back to this schedule. How do you enjoy today's session? All right. I'd like to hear your feedback, and let me just fire this away. Do you enjoy today's session? Oops. Hang on a minute. Ding. Okay. Thank you very much for joining me. And of course, many of you are waiting for me to fire off the Don't Stop Believing trades. We took a break for about, I think, close to 6 to 7 days. Don't worry about it. Those of you who are subscribers of it, we are going to make up the numbers for you, all right? I just couldn't handle the transition. There's a lot of things happening when on the last day when I check out of from a Tata residence at Harvard Business School. I got to check into another hotel to stay for one night. That kind of disrupted it. And then I got to do the domestic flight from Boston to New York. And then there's another delay at the airport. And then from New York, fly down to Singapore. I was supposed to do a live stream yesterday, but I was knocked out by jet lag. Today, I will resume the Don't Stop Believing trade notification. All right. So thank you very, very much for your patience. And during this period, I'm very, very grateful. Those of you who stood by, continue to support us. Thank you so much. I really, really appreciate it a lot. All right. And over time, I'll start to distill the wisdom I pick up from Harvard Business School, connecting business straight away into the stock market, and then applying it in your career and in your business as well. Thank you very, very much, and may God bless you. Goodbye, everybody.